Hi, all this is Dr. Jason. We're live from Long Island, New York, where the weather was fantastic. Could have been a little bit warmer, a little chilly now as I'm wearing a little spring coat. At least it's a spring coat I'm wearing, not a winter coat in my house. The other day I felt like wearing a winter coat in my house. It was really, really cold. I put the heat on up to 70 in the middle of May. I mean, that's crazy for New York. Anyway, the market did well today, not quite as well as yesterday, but it rebounded off of what looked like it could be a losing day to a winning day. We like winning days. We sold our AMD, that is, I sold my AMD. Either I'm I'm Dr. J, I'm me, I'm both of us, I'm one of us, I'm neither of us. Sometimes I feel like I'm becoming schizoid with this. In any event, I sold my AMD overnight that I bought the night before for a quick point. Could have been more greedy. I could have held on and be up a point and a half. But I wanted to undo the quick loss that I took about, what was it, a week ago? If you're following me, I told you I took a quick loss on AMD. I think an 80-cent loss, so I'm 20 cents ahead. In any event, I guess I should have held it, but I didn't. What's more exciting to me is the movement of some of the biotechs, including my biggest holding, ATHX, which had a 40% move. Yeah, you heard me, a 40% move from April 18th until now, less than 1 month. That's a pretty phenomenal move. From $1.35, it hit over $1.90 today, closing at $1.88, closing above resistance, getting back into the channel that it was living in for about 9 months. Okay, so we're going to take a look at that chart. We're going to look at DFFN. Now, as you recall, I told you about DFFN about a week ago. I've been buying into it ever since. It made a very nice move today and an even nicer continuation after hours. I don't know if it's heavy volume or just nonsense. I didn't look into it. But it looks like a stock on the move. And what interested me the most is not only the technicals, but the fundamentals. It has a drug that you can administer on ambulance to stroke victims. And that's for both ischemic stroke and I have trouble with that word, hemorrhagic stroke, a hemorrhage in the brain, however you say it. As long as I don't call it hemorrhoidal, I guess I'm not too far off. In any event, it's not a funny matter. It's a serious matter. As you know, there's only one drug, a blood clot buster drug at this stage that's used for stroke victims, has to be administered within 4 hours. And if you make a mistake and it's a hemorrhagic stroke instead of an ischemic stroke and you give that drug, you probably kill the patient. So it's a little scary and it doesn't work that well, but it's the only thing available, so that's what's given. The two companies that I'm going to talk about, ATHX and Diffusion Technologies, both have ischemic drugs and for ischemic stroke in the hopper. ATHX, ATHX, is ahead of the DFFN in that it's in phase 3 in Japan, and I think it's going to start what would be equivalent to phase 2 in EU and United States, multi-center study, probably phase 3 actually. And they're fast-tracked on their odds research, ARDS, that caused it to pop just the other day. ARDS, acute respiratory distress syndrome, which was fast-tracked by the FDA. The announcement came, when did it come? Came Monday, I think. Yeah, it had to be Monday. And we had a tremendous pop on Monday from, well, we'll look at the chart. Also, I want to take a little credit for coming very close to nearly perfect. I'm calling for the correction to end, and I do believe it's ended, but we can't be sure just yet, and I'll show you why. We're going to look at the SPX. We're going to look at the DJIA. We're going to look at the IWM and the QQQs, as well as ATHX and DFFN. That's on the lineup for tonight. So, as always, with your own due diligence, my opinions are strictly my own, do not constitute investment advice. Seek an investment advisor if you like my ideas and wish to follow me. Dr. J occasionally has some really great ideas, but also very on rare occasions have some terrible clunkers. Your job is to differentiate the winners from the losers, and let me know so I can also differentiate them. Please tell your friends about me. I like to have a few more followers. It makes me feel good. The bigger the audience, the better. I know 500 of you viewed my blog, most recent blog, 540 or something like that. That's a decent number. But I think I want to spread the word, so to speak. Okay, so where are we? I got to hit this share screen, excuse me. Okay, so please subscribe if you haven't already, and write comments and give me a thumbs up, all that good stuff. Okay, let's get to the video charts. What should we start with? Right to left or left to right, or let's go right to left. We'll start with diffusion. This is for getting oxygen to oxygen-deprived areas, which is, I guess, what happens in ischemic and hemorrhagic stroke. So it's very effective for that. I don't understand why it actually had its mechanism of how it works in the cancer area. I know it has a GBM trial, glioblastoma, something or other, brain cancer tumors, and it's in combination with two other drugs, well, a combination with radiation therapy and a chemotherapy. I think they're in phase 3 in that study. They're entering phase 2 on the stroke study. All right, so let's get to the chart on this one. Chart. Where does the chart? So you see, after hours, it was up 22 cents. But again, I don't know how the kind of volume or the news or anything. So I'm in the dark there. It made a nice pop during the day, 4%, after bouncing off the 4s. I think just the other day it was $4. This has been very volatile on no volume. The only high volume days were 5.2 and 5.3, I believe. Yes. After that, the volume died. We had a speck of volume. I mean, hardly any, but a little bit on 5.7. And now we have a trickle. On this trickle of volume, however, it looks like we may have put in a bottom on Monday at a low of 373. Yeah, that's what I mean by volatility. 373, 453, 474. It's all over the place. So if we can put together another high volume day, I think we could take this high out on any kind of news. So this high is 649. I mean, no doubt this trades like a penny stock. I don't know what the market cap is on this. We could take a look. Should we? Yeah, why not? Let's take a look at the market cap. The market cap is 15 million. Yeah, that's what I figured in that vicinity. Anyway, let's get to the full screen. Okay, so this is the 100-day, this is the 50-day, and this is the 200-day. Notice the 50-day is about to cross the 200-day. That could be a very positive sign. Stocks often make big moves off of that cross. It's already made a big gap up from the, what day is this? From the 1st of May, it was from 314, jumped to, well, it jumped all the way to 649. That's pretty huge at the high of the day. It's more than double. So it ran on May 2nd. I must have been on news of the phase 2 trial being approved, would be my guess. Since then, it's drifted mostly down. It never, I don't think it ever tested the low. Let's see, the low was 307. The low, as I said the other day, was 373. So it never got to 307 again, but 373 looks like it's trying to put in a low there. It's hugging the 50-day. It's hugging the 50-day averages for support. It bounced off of that today. Never really hit the 50-day, which is good. Just putting a little separation in. So basically, since that big up day on May 2nd, it's trading mostly above the 50-day, which is a bullish sign. The 50 crossing, well, it crossed the 100 back here. Now it's going to cross the 200, another bullish sign. So when it crosses the 200, that might be an indication of a further rally up above this 649 level. So I'm looking for, I've already bought this 3 times. I don't know what my average is, but I'm thinking of buying some more of it right about where it is, if I can pick it up for $4.50, something like that. And looking to play it to about 6.25, and with a stop back at the low at 375. So 375 stop, get in at 450, risking 75 cents to make $1.75, right? $1.75 would mean 6.15, so $1.75 versus 75. So I'm looking for a long shot on a swing trade, but I want to keep some of this as well. I like the fundamentals. So we'll see what happens. I mean, you know, biotech is risky. This is a particularly volatile one. Be very careful if you decide to follow Dr. J with this one. You could easily lose a lot of money or make a lot of money. Similar to Atlantic City at the craps table. ATHX, ATHX. ATHX, my biggest holding, has been very kind to me the last 2 days. Thank you very much. And this is the big pop on news of the fast track status of its odds research, odds clinical trial, multi-stem for odds. How's that? ARDS. So getting all tongue-tied here. So it crossed the 200-day with that move. It's been trading above the 100. It's been trading above the 50 down here. It made that cross right about at the lows, right about on May 9th when it was $1. Well, it wasn't the lows. It was $1.50. The lows came to here, $1.35. So this is a move I'm talking about, 40%. From $1.30, well, where was $1.30? I know it hit $1.35 recently. This must be $1.35. 418, $1.35. $1.35 to high of $1.93, it should be to 40%. So we had a very nice move in less than a month with a new high, higher low, lower high, higher low, and now we're putting in a higher high. So we're in a bullish pattern. We're trading finally above all the three moving averages. And I think the 200 should serve as support. So if there's a pullback, it may not be much of a pullback, probably to about the 475. I mean the 175 area. So that's not too bad. I mean, it's not good, but that would be probably support. Maybe 177 is even a better number because that corresponds to my support line here, 177. The high, we put it at 125. So I would say 177 would be a double support based on the high of 125, and the 200 should be right about there too. Okay, so maybe just below it. And the prospects for ATHX are looking really, really good. As I said earlier, it should run up like CVM every month as it gets closer and closer to data readout, which is yet, maybe 10 months away. I could see this going up each and every month for 10 months. How much, I don't know, but I'd love to see it at where CVM is prior to the data readout sometime towards the middle of next year. So maybe around this time next year. So, or a little earlier. So it could easily be, CVM is $7, $8. I think it could easily go to that $7, $8 area over the course of the next 10 months. That's my feelings of fundamentals. In order to confirm such a move, we would need to take out 214.98, 215, which we put in on 12.12. So we take that strong resistance line out, then I think the sky's the limit for this one. Until then, there may be a struggle, just like there was a while ago, breaking out of this trading range from 185 to 215, right here. I mean, it must have hit 215 half a dozen times. Let's make it smaller and take a look. Well, I don't know about half a dozen times, but it certainly straddled that 215 line. Yeah, probably half a dozen times. Inching over it a few times, but quite a few touches at that 215 level and quite a few touches at the $1.85 level. So it's a very good sign that we closed above $1.85. I tweeted out in the middle of the day, it would be sweet if we close above $1.85. Well, I got my wish. It closed above $1.85. My wish for tomorrow for this stock is that it have complete separation from the 185, open like we're at the close at $1.88, and close somewhere around $1.99. Modest gain of 11 pennies would make me very happy, with complete separation from the $1.85, on its way up to test the 215 level. I mean, it's got momentum. It could do it. It's like a stretch runner turning for home with the Momo. It's gaining, 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 gaining. So it's been doing very well in terms of price action. I gotta like the chart. I gotta like the fundamentals. I love the fundamentals, actually. I've talked about the dynamic CEO a number of times, Gil Van Brocklin. So it's got a lot going for it. I don't know as much about DFFN as I do about this one, but that one also looks interesting. Let's take a look at the Qs. The Qs was the best performing index of the day, up 1.41%. I guess Nasdaq 100 was comparable. Where are we with the Qs? Well, this is the 50-day moving average. It served as a resistance today. It could not propel past, but it had a hell of a day. So the Qs, led by the usual suspects, I guess, Apple, Amazon, and so on. The tech-heavy Nasdaq 100 led the charge up today and was the best performing index by far. Where do I expect this to go? I expect that it'll go above the 50 and continue on up and make new all-time highs. How's that? So that's not hard to do. The all-time high around 190, 132. It's not that far away. It's only 8 points. 8 points is really not much. Maybe about less than 5%. It's very easy for it to make a 5% move from here to the upside. Where would I find support? Right here. Right here, 177.86 looks like excellent support level. So we're just above support. And if we break that, then we're looking at support at the 200 and the 100. But notice the 100 is about to cross the 200, which again is bullish. When the 50 crossed the 200, we had a nice pop. You notice it continued to go up. When the 50 crossed the 100, we had a very nice pop, didn't we? So these crossovers usually happen after a nice rally. The Qs already had rallied a long ways, but it kind of came down and kind of came back a little on 3.8. It looked like it was coming back. And then we have that crossover that ended the correction and zoomed it up. So crossovers can do what they're supposed to do occasionally, and occasionally they don't. Over here, the crossover was a negative one, the 50 crossing the 100 to the downside, which is bearish. And sure enough, we did give back quite a bit right after that. So, and what about this crossover? The 50 crossing the 200 here, we had been on a rally, and as soon as that crossover happened, we gave back a lot. So it's been pretty accurate, amazingly accurate for the predictor of the Qs. When that 50 crosses 100 or the 50 crosses the 200, this is interesting. The 100 is going to cross the 200 soon. Is that going to also give it some positive energy? We'll see. I think the 50 is more relevant, but this is also a bullish sign. Over here, the 100, well, we looked at that already. They had 100 cross the, oh, this is the 50 again. Where's the 100? The 100 is the green. Yeah, the green is the 100 crossing the 200 on the downside. Should have caused a sell-off and did it well a little bit, but not much. It had already sold off a lot, and that's why the crossover. So it was on the way back up, and it did predict a little pullback. Well, that's all you got was a little pullback. Hardly a great indicator there. So let's see what happens when it makes a cross in the other direction. Will it be more significant than when it crossed to the downside? Okay, so anyway, that's enough time on the Qs. I'm bullish the market, I'm bullish the Qs. I think we've seen the end of the correction, although what have we got in terms of turning points? We have a a high, a low, a high, a low, a significant high right here. Let's see, is this the high? No, 191.25. This the high, 191.22. I'm looking for the high, 191.32. All right, they're all about the high. There's about 4 points that are about the same, right around 191 and change. That's going to be very tough to take out, considering how many hits it's had right about there. Anyway, let's say this is the top. We have a low, a high, a low down here, and a high. So until we get a high, a low, and another high, a high, we can't say in all fairness that we're in a new bull phase. I think now it's clear that we're still in a mini bear correction. This is a lower low. I don't know if this is a higher high. It's a little unclear from this chart, but it looks like we have enough of a pattern of a high, low, high, low, high, low to indicate a bearish scenario. And we need to get a little pattern going of higher lows and higher highs, in my mind, to make it official that we're back in the bull. Let's take a look at IWM. It's amazing how many ways people define bull and bear markets. Some people say, well, if you're trading above the 50, you're in a bull market. Very simple. Some people say, well, if the 50 is trading above the 100, we're in a bull market. So if the 50 is trading above the 200, we're in a bull market, and so on and so forth. So the bull market definition is just not too clear. To me, it's better to look at series of higher lows and higher highs to pronounce something a bull market, to pronounce a wave as a bull wave or an impulse wave in the bullish direction. The IWM closed only up, by contrast, 0.33% as opposed to 1.41 on the Qs. So the broader market did not perform nearly as well as the FANG type tech leaders that comprise the Nasdaq 100. Nevertheless, its chart is similar. The 100-day moving average is proving to be support, while the 50 is looking like potential resistance. The good news is, what's the good news? The good news is that, well, I don't know what the good news is. The good news is we're going to take the 50 out. The 50 and the 200 are together, by the way. So that's the good news. The 50 is about to cross the 200, and that's very positive. The 200 has been serving as support for this average and also as resistance. So this is resistance. This is support. Allergies. All right, I'm going to take time out to drink a little water. Dr. J is very allergic to the spring, but we haven't had much of a spring. I'm also allergic to, like, it seems like my allergies bother me with wet weather. I don't know why. Spores, molds, whatever. In any event, I think we take this out, this barrier here. I think the 50 will cross the 200, leading us to new highs above 161.11. They will not be all-time highs, however. To see that, we need to go to the weekly. Okay, so we can see from the weekly, we made an all-time high in August of 27, a year ago. That high was 173.39. So we're still 20 points below that, which is more than 10%. That's why I think the Nasdaq will play catch up with the other, the Russell will play catch up with the other indices and take out its new high with a tremendous run. I think it'll be the best performing of the four indices when we get into the heart of the final leg of the bull market. Yes, I think we're going to go into the final leg of the bull market, and it should be phenomenal. It should be a fireworks display. We're not there yet. You'll know when we're there. And let's look at the, so I'm very bullish, this index, this ETF. I'm very bullish the Qs, but I'm more bullish the IWM. And it happens to be the best performing of the four indices since the year 2000, by far. If you chart them, if you chart all four together, you'll see what I mean. I actually did a vlog charting all four together, but I don't remember what date it was. You'd have to hunt for it. The SPX, down 2.41% or 70 points. What does this show? It shows similar to the IWM, but notice the 200 is below, not above, but the 100, just like the IWM, is below, but not close to where it's trading at. So it's not going to be a support level. The support level is this horizontal line, which it actually touched today. The low of the day touched it at 28.15. So at 28, wait a second. What is the low of the day? Yeah, 28.15. 28.15? And why does it say it closed at 28.11? Because that's wrong. Can I refresh this? You don't mind, do you? It's annoying me that wrong numbers come up. That's better. 28.50, up 16. That's better. So the low of the day was the hit support at the low of the day, 28.15, bounced up to close at 28.50, up 0.6%, significantly better than the IWM, but not as good as the Qs. So somewhere in the middle, I think comparable about to the Dow. Support is, again, this horizontal line. And it looks like resistance would be the 50, the purple line, which is the 50. So resistance is up about, can't read it, 28.72, it looks like. Probably. Well, that would be a pleasure if it gets up there, right? Nice, no, it can't be. It's not that much. I can't read what it is. 28.54. That's what it is. So we're close to resistance. If it hits resistance and goes through it, that would be very positive, of course. And we also have a nice trend line that might be resistance as well. But at least it's an ascending trend line, so you don't mind that so much. If it finds an ascending trend line to hug at the bottom of, it means it's moving up. So I don't mind a little resistance off of an ascending trend line. Horizontal lines, of course, a tougher resistance than an ascending trend line. So if it bounces off the ascending trend line, we've made a nice move already, and I'm happy. I'm not saying that that would be the end of the move, but let it follow it. That's fine. So I think the S&P, just like the other indices, is going to take out its all-time high up here of 2954. That's only 100 points more than where it is now. That isn't much, right? That's about 3% move up. That should be easy compared to the IWM, which has to go up over 10%. So this is a 3% move to all-time highs, easily within reach. I mean, 32 points, about 30 points to a percent, 90 points. Yeah, it's about a little more than 3%. What about any crossovers here? The 50 crossed the 200 right about here, right? Yeah. And was it bullish? Yes, very bullish. So it's been an accurate call right there. It looks like the 50 is trading way above both the 100 and both the 200 and the 100 right now. But the 100 is about to cross the 200. What happened when that happened last? When the 50 crossed the 100, it was very accurate that it was sold off. Where is the 200 and the 100? I'm looking for it. Right here, there's a cross, right? And it's when the 100 crossed it, it was supposed to go down, and it didn't. So this crossover is pretty meaningless. It did, but very little, very irrelevant almost, irrelevant. The Dow Jones Industrial Averages down 138.97%. That's not right. Why is they giving me such numbers? Can't just believe everything you read. Up 115.97, that looks better, 25,648. And it found support today right at the 100. These moving averages have been providing amazing support and resistance for the Dow, for the S&P in particular. It's quite amazing how it's been working out. Trendline support has also been amazing. This line right here, this line right here. So trendline support has been great. The moving average supports have been great. So this figures to be resistance right up here at 26,056. That would be about 500 points, something like that. So we still have a ways to go before we bump into the 50. And this would come first. This is certainly going to be some resistance here at about, let's say, the closing, the 25,942 is resistance here. So we're going to have resistance at this horizontal line, resistance here. Till then, I think the Dow, we should just go straight up another 500 points. Nothing to stop it. That's what I think. So that would be great, right? Maybe another 2% straight up could happen in one day. 500 points is nothing for you get those moves in an hour. I mean, it's crazy. So if we do get that 500-point move and bump into this support line here, this resistance line here, this resistance line here, then we might bounce back a little and then push through it on our way to new all-time highs. So again, I see the Dow at new all-time highs, but to see what the all-time high is, we have to look at the weekly, because this is not an all-time high. This high at 26,680 is not an all-time high. I think the all-time high was 26,951, but we have to look at the weekly to find it. So I'll just take a look. This looks like it, right? 26,951. Dr. J is right for a change. And that happened when? On 10/1. Okay. So it's been some time since we've been at new highs on the Dow. While we have been making new highs on the S&P and on the Qs, on the Nasdaq. The Dow is still 1,300 points away, about 4%, a little over 4%, closer to 5%. So we're 5% away from new all-time highs, and the IWM maybe double that. So the Dow should play catch up, the IWM should play catch up, and the Qs are on fire right now. So to catch them will be tough, but certainly the IWM and the Dow should outperform even the Qs over the short term going forward, in my mind, especially the IWM, which has been the laggard and historically has been an outperformer. So I like the broader market, the small cap stocks in what I think is going to be a blow off top to this very long in the tooth bull market, which I think we have ways to go. I'm not sure how much of a ways to go. Hopefully I'll understand that better as we start getting into that penny stock craze where people start making tons of money buying stocks under $1 and selling them for $2, $3. What happened to my light? Well, you know what happened? I talked so long that it started to get dark in here. And the camera, something's wrong with the camera, or something's wrong with something. This is not a good picture at all. So this has been Dr. Jason live from Long Island, New York. Wishing you all a happy trading for tomorrow. Please follow me. Please subscribe to the blog. Please write comments. Please tell your friends about me. Share the link. Please give me a thumbs up. I love those thumbs up. Dr. J gives you thumbs up all the time. Okay, so again, Dr. Jason, live from Long Island, New York. I want to say shalom, sayonara, au revoir, arrivederci, ciao. Hasta mañana. See you all tomorrow, hopefully.